Welcome to Bridge DeFi and to our discussion with Ashley Murphy. Ashley is a professional trader and somebody that has worked with me and been a mentor on my side with regards to trading. So he's going to be telling us more about how the trades are looking and also what's happening in the market, giving some explanations on what we should be looking out for. Would like to just dive into it straight away. And Ashley, welcome. And how are things going today?
Hi, great. Thanks, Malcolm. Hi, everybody. Yes, very good. Well, yes, we're looking pretty good at the moment, Malcolm, I must say. Things are looking quite bullish. I'll quickly run through a little bit of tech analysis here for you guys, just to show you. For those that are not familiar with trading, not to worry, I'm sure you will pick up things as we go along. For those that do, well, we're looking at a chart. This is a daily chart, Malcolm, and as you can see, we've got a falling wedge situation that's been going on for a pretty long time now. I'm just going to drag over a horizontal line here quickly just to show you.
Just mention one quick thing. For those of you who are new to this, Ashley's working on a daily chart. So each one of those candles represents a day, just as a quick explanation. Thanks, Ashley. Carry on, yeah?
Sure. Okay, so I'm going to put a horizontal line here just to have a look. You can see from around about the 14th of April, it's about 2 months ago, we've been on a steady decline in the price of Bitcoin. As you can see, we've been moving on this downward direction for the last 2 months. Okay, after the most recent high that we saw at just over $31,000. Very short-lived bull rally, in my opinion. Knew it was going to happen at some stage, but we can see we've got quite a healthy pullback correction now. And, just with all corrections, the big question on everybody's mind now is, when are we going to see some kind of a bounce and then the price probably go back up again to retest that previous high? Or are we going to see the price drop down even lower in the not too distant future? So on my chart, if I can just explain to you quickly, I'm running a Fibonacci, Malcolm, which you can see from the swing low to the swing high. And it is showing us a golden pocket at round about 23,800, $23,700, $23,800. So there is a big possibility that the next leg down, if the price breaks through this green bar here, which you can see, I'll just squeeze the frame a little bit here, the chart, and you can see this green bar you're looking at here is at a significant level of support going back all the way to August 2022, which, if I can just 1 second, find my little arrow here. I'll just put a quick little arrow in there for you. We can see there, and we can see there. And now we are testing the area again in over here. It is quite significant support because it goes back quite a long way. So the support is pretty strong. And you can see we have been testing it for the last, I don't know, a few days or so now. It's the first time we've actually come back to these levels for quite a long time now. I mean, if we go and have a look here, this bull rally actually started around about there. Let's say there. Let's just make it white. Let's make that a little bit thicker so everybody can see. Thursday, 29th, December 22 is when this bull trend actually started. And it ran all the way to April. And then, as I said, we see a turn. But where we are sitting now, we know that a couple of days ago, the Fed dropped some of the stats on interest rates. And in my opinion, the reason why we saw, let's just go from a daily. I'm going to take us straight to a 30-minute. so we can have a better look here, a closer zoom in look. You can see this big drop here on the 14th, which was 2 days ago, when the CPI and the PPI report dropped. Jerome Powell actually dropped a little bit of information that I think he didn't really want to do intentionally, but he did say that it looks like they're going to keep pushing hike the interest rates for the next couple of years, which took, because they actually did nothing on this occasion. They kept it the same. They didn't increase or lower it, which was pretty bullish. Well, when he opened his mouth and he said that this is going to go on for a couple of years, I think it brought quite a bit of negativity into the market. People panicked a little bit. The investors panicked a bit, and we saw this spike down here, which, Malcolm, you know me, I don't make too much of these things because it's not really. It was a pretty decent drop. Look, 4.5%. As a leverage trader on a 10x, that's 46, 45, 46%. It's pretty good for a day's trade. I'll take that. I'm not gonna complain on that. But then we saw a drop into this trough here, as I just explained on the daily, where you see we have this pretty thick band of support. And you can see it dropped a little bit below 25,000. It didn't quite make it down to the 24,400 mark, not that I saw on Bybit anyway. But you can see we held the support here and then a little bit of a bounce back up. This channel I'm showing you here, this green one, this was a red channel of resistance. I changed it because you know the story, resistance now becomes support. And it's interesting to see that this band is sitting right at the exponential moving average on the 30 minutes. So it's quite clear to see that we're now testing a range which is a little bit higher at about 25,500, 25,600. Now, what's going to happen after this? If the bulls can hold this position here over the next few days, possibly to Sunday, I think that there's a very big possibility that we could see the price go and retest the 26,200, 26,400, maybe Monday, Tuesday. I also do know that there is a CME gap sitting somewhere. I'll have to go to the 4 hour. Hold on 1 second. There is a CME gap sitting somewhere.
CME gap being, can you give me an explanation?
It's gaps in the market. It's basically gaps in the markets. On another video, I'll get into that and I'll explain to you guys what CME gaps are. And these gaps are, they normally filled quite quickly. Let me just go to the daily rather. Sorry, and I'll show you a little bit. Yeah. So next time we do a video, I'll bring up the CME chart and I'll show you that somewhere around here, there's a big gap. So in my opinion, I honestly, I don't know how long it's going to take. I actually, on our group, left a screenshot the other day. I said that we could probably see maybe over the next 2 months. It may happen a lot sooner, but if we just took from where we are here and we brought it down to the bottom of the falling wedge into the Fibonacci, it means the price needs to drop another 6.7%, more or less, for us to reach this golden pocket. And you can see the time stamp there. Well, the time factor is 34 days. So I think, on these macro charts, on the dailies and the weekly, we know that things don't just happen. We need a bit of time. And look, unless we didn't break through, we can see, as I said, when you're looking at the daily, you can see the bottom of the falling wedge is exactly the same place as where this green bar of support is. And we held it. You can see it. It's quite clear. You can see it. We did it did break through a little bit. This is what we call swing failure patterns. And these are areas of high liquidity. So if you go to CoinGlass and go and have a look at the liquidations that were done on that, I think it's like over 40 million in short liquidations. Remember I said on the group the other day, it's not the place where you want to place a short position. I am on our account, on the BridgeFi account, I opened up a small long, and I took about, I don't know, it wasn't a big trade. I got out pretty quickly, but I think I took about $400 or $500 on a quick little trade on a long position. But it was definitely not a place. The short only happens after the confirmation. So if you're going to short this, I would have shorted it somewhere around there. I would have run I would have run a stop loss into that green band, and I would have put my take profit at probably just below the fib, the bottom of the fib. That would have been the trade there. But until we got that confirmation, it just didn't make it through. I would never place a short position. So what I did instead was I ran a long position, and as I said, it worked out pretty good. I maybe exited the trade a little bit early, but that's fine.
Yeah, just a point on that, on taking profits. One wants to take profit when you can.
Of course. Of course. Malcolm,
I've told you
guys this. Yes. Yeah, look, I mean, we know that like every trade that we don't just randomly bounce into trades. If you're going to open up a trade and you haven't got a proper thought out trading plan, well, then you don't know what you're doing. You're not trading, you're gambling. You might as well go to the casino. So every single trade we do, we plan out very carefully before we enter. And, obviously there's a level of discipline to that trade as well. We accept our losses even before we enter the trade. So I know if I'm going to run a 10% on a $30,000 equity trade, my 10% is the $3,000, and I'll put in a 5% stop loss. I'm not going to, I've already accepted the loss before I already enter the trade. You see? That makes, then I can go and sleep without, pulling my hair out. I can have an easy night's sleep instead of sitting there worrying about, am I going to move my stop loss? This can happen, that can happen. So, yeah, so it's all done. But, just to kind of end this off, and I want to go too long, just to say that, look, over the weekend, we need to see now, as I said, what's going to happen. We need a little bit more clarification here. I do have another long position open, small position. Just basically, I go fishing. I call it fishing. I do have a trade open, small one, and I'm quite certain I'm going to go back to the 30-minute just to bring things back into perspective here, just to show you guys before I finish off here. I'm hoping that the price is going to respect this level of support here, and I'm going to just go back to, because as we know, resistance has now become support. Sure. And I'm hoping that between this band and the exponential moving average, that the price is going to hold here in this area, and then we might see the next leg up to the 26,200. Hopefully over the weekend, or possibly even on Monday or Tuesday. So we'll see.
So Ashley, could you just quickly before we go, just so the guys can understand exactly where would you, if we just go back in history there, I think, what are we on the 30 minutes? So maybe it's where that long position is. Where would you enter a trade and where would you exit a trade? just to give people an idea of how you would trade that
Okay.
position.
Okay. So look, what we want to do is we want to remember always when we're entering a trade, regardless of whether it's a long position or a short position, you always want to be looking for areas of high liquidity. Okay, these are the most common areas where traders, especially retail traders, will go look to putting in trades. Okay, so for example, if we take a look at the Fibonacci, the golden pocket is a very well-known area. All the algorithms that are written for the exchanges are all written based upon the Fibonacci retracement tool. And, you know, the money makers, they know, they can see where the retail traders are putting their orders, where they're putting their stop losses. So it's not just a question of where you're going to enter, but when you enter. Timing is very, very important. If you go into the market too early, you're going to get stopped up because that's what they're going to do. They are looking for liquidity. You got to remember, the money makers, the market makers, they need the liquidity to move the markets. And where do they get the liquidity from? Unfortunately, they get it from yeah, they go and find it. They go and take it from all the dumb, from all the retail traders, from the dumb money, what we call the dumb money. They go, they fuel their Ferraris with the dumb money. So what we do now as traders, obviously, because we're not privy to all that data that the whales and the money makers and the market makers have. So what we got to try and do is, as one of the, remember what we've said, you know, 80% of traders lose money, and you got the 15-20% that will actually do well with the trading. So those 20%, the reason why they become the 20% is because they put themselves one step ahead of the money makers. So you got to be as smart, if not a bit smarter. We know what they're doing, and all we do is we protect ourselves. Where the normal retail traders, they get stung time and time again because they keep making the same mistakes over and over and over again. So what I'll do, if the answer to your question, as I did yesterday, if I'm looking for an entry, first of all, I'm going to go and have a look for order blocks, which I'll explain to you later. I'm going to be looking for areas of high liquidity, which I will get into later as well. And then I'm going to take that area, and I'm then going to be looking to place, and in this case, I'm going to be placing a long position. You've got to remember something. We're always longing into strength, and we're shorting into weakness. This is vitally important to understand. We're shorting into a weak market, and we are longing into a strong market. Makes sense, right? Okay, so what I say to people, if you are thinking of placing a short position, yeah, because you've convinced yourself that the price has now reached this area of support, yeah, and this is a good place to place a short position, because the price is going to come down, you're making a big, big mistake. That's not the way it works. You will always be bullish at this area until the support is broken. Once the support is broken and there's a confirmation, let's say the price came down there and it broke through, we'll normally wait for it to bounce back up again. Support now becomes resistance. The price will do something like that, and now the price will start moving down. If you're looking for a short position, if you want to short the market, this is where you want to come now, place a short somewhere in this area. Somewhere in this area, probably at the bottom, okay. And you can run a stop loss because there can always be that bounce back in a little bit just to come and retest, but this is where you play. This is where you place, but it has to break below. So in our case, it didn't do that. And I went with a long position, and if you look on the group, I actually said the day before, we're probably going to go green after that significant drop in the market. And I was 100% right. We went green, and you can see the price bounced off the support and it's gone up. And now we are doing it all over again. Basically, we now that it's reached a new high, we are going to see now. Now that's the question again. Is it wise? Because look, it's breaking through, and a lot of people think, oh, this could be a good place for a short. No, no, and no again. You never do it. You never short at levels of support until it's broken.
Yeah.
The golden rule. You never short a position at levels of support, just like you never long positions at levels of resistance.
Yeah.
Right? So, to finish up the question, this is where I did a small trade yesterday, as I said, and I didn't do much. It was about $400 profit. We took small trade. But what we did was I entered somewhere down here. I'm not sure. I got in somewhere at the bottom here with a nice little long, and I took profit somewhere around there in a small trade. And now today we have now created a new, and we're going to see if it holds here. And if it breaks this position here and opens and closes a new candle below, then I'll consider running I'll change from a long to a short position. But today and over the weekend, I'm looking to run another long position somewhere in this area here. Probably somewhere there. I'll wait for a bit of confirmation. We'll run the stop loss maybe a little bit lower, just so that we don't get wrecked. Because that's another thing as well, where a lot of traders, you either run a too big stop loss, or you run a too small stop loss. And then what I'll do is I'll aim for around about 26, which would be the next level of resistance. We'll aim for taking profit at around about 26,200. And I mean, it's not bad. It doesn't look like much, 2.7%, but on a 10x, that's 27%. It's wonderful. Not going to complain about that.
Yeah,
so we can see
that's not a bad return.
Yes, exactly. And you know what they say, Malcolm? No one's ever gone broke by taking profit, eh? So
absolutely,
we can see here we've got two positions already in the last couple of days of a really pretty decent trades. If one stayed in that position and you entered there, you're now looking at 4.7, which is pretty much the drop that we saw from there to there.
Excellent.
And I like taking profits, but then there will be obviously other trades. All depends where you climb in. We spoke about this a few days ago, where we could find ourselves in a trade for possibly even weeks at a time, if they are really strong positions.
Yeah.
But for the meantime, I would think that we're going to see the price. I think this is what's going to happen. Just as a quick little prediction here for you guys. This is what's happened so far. And then we've got a little bit of consolidation here. Boom, boom, boom. I think we're going to see that. And I think we're going to, if I can just, I think we're going to see this back into the golden pocket over the next month or so. I think this is inevitable. I think that golden pocket is inevitable. We go into the daily, just quickly before I finish. We can absolutely see that we are in a downward trend, and we have been for the last 2 months. That's looking at from a macro scale. And we always got to give macro scales preference over short time frame analysis. It's obvious.
Yeah. So I think we just need to that's been excellent information. And yeah, thanks, Ashley. And just want to say one thing on there is that, guys, remember, the beauty of what we're doing with the TradeFi NFT and what Ashley's doing here, even though he might be talking about the market going down to 23, that's not a bad thing. That still means we can make profit in either on longs and shorts, because we trade both. So yeah, so that's don't think, oh wow, the market's going down, what's happening. we still make on both. And that's the beauty of this product. And the last thing I'd like to just end up with, we're going to be bringing in a very exciting new opportunity for all of you, where you'll be able to get more information from Ashley, but just hold tight and we will release that soon. So get ready to learn a lot more about trading, because we got a great offer coming to you. So yeah, Ashley, thank you so much for that. And that's great information.
Malcolm, sorry, can I just say one more thing in passing? I'd just like to tell all the investors and the people, as a trader, I want you all to know this. I care not what direction the market moves in. As a leverage trader, I make money whether it goes up, sideways, or down. So if that can be seen as a very positive thing, it is why I'm a leverage trader, because it allows me to trade the market in whichever direction. So I really don't care what the price of Bitcoin is. It's irrelevant to me at the end of the day. All I care about is market analytics, the analysis of the charts, and all I need to know is what direction the market's moving in, and we can make money. And on that note, thank you very much, Malcolm.
Excellent.
And yeah,
look forward to the next one and chatting through the next one. It's very exciting, this. Ashley.
Yes, wonderful. Thank you so much.
Thank you so much. Okay. Cheers.
All right. Take care. Bye.